Thanks very much. I'll just wait for those people to come in. Good morning, everyone. I'm Luke McFadyen, the CEO and Managing Director of Minerals 260, and over the next 15 minutes, I want to show you exactly how we got to where we are today and what we're going to do next. 12 months ago, I stood on this stage and introduced myself and the company and a new project that we just bought called Bullabulling. Our market cap was $250 million. The resource was 2.3 million ounces. We hadn't started a study. We weren't in construction, and we were still trying to convince everyone in the market that this was a great project. Well, today I'm back, and now the resource is 6.2 million ounces. We have a maiden reserve of 2.5. We've completed the study for a PFS. Construction has started. We signed an industry-changing royalty deal with Franco-Nevada, and we entered the ASX 200 last month. Everyone at Minerals 260 is incredibly proud of what we've achieved over the last 12 months and what we've delivered for shareholders. But more importantly, we remain increasingly and incredibly excited about what the future still holds for the company. Our story and value proposition sits on 4 clear pillars. A strong team with a track record of success across multiple companies, commodities and countries, and a strong balance sheet following that industry-leading deal that we did with Franco-Nevada earlier this year that genuinely reinvented how the Australian market thinks about royalties. Bullabulling is a Tier 1 asset with a clear pathway to production, with embedded growth in how we're designing the plant and the operations to ensure we continue to grow this business alongside this rapidly growing resource. But let's start with the matters that matters most to investors. 12 months ago, like I said, our market cap was $250 million, share price of 12 cents and daily liquidity of about $1 million. 12 months later, 1.4 billion market cap, share price of 62 and daily liquidity of 15 million. We are a fundamentally different company 12 months later. We've grown this company by adding value through the drill bit. 170,000 metres have been drilled since the last time I presented to you. And we've significantly de-risked the project funding and rapidly advancing it towards an operation. Our investor base remains incredibly strong. The top 20 have increased their ownership over this last 12 months and continue to back our strategy for the project. Our register is an outstanding blend of international and domestic funds and retail investors like yourselves. The board and management remain completely aligned with you because we are also investors in this company. The board that was with me and supported me last year is still the same, plus one important addition with Adam Smits. Adam is very well known to you as previously his executive role as COO at Liontown, where they successfully built that Kathleen Valley project. Below the board, many of these are new faces too. We've built a project and operating team already, and a team that you actually need to build a mine. Russell Brooks, the Chief Development Officer, is here with me today. Jack Dermody, Chief Operating Officer, and both of these outstanding colleagues worked with me at Oz Minerals. Mark Mueller, our GM of Geology, leads an incredible geology team that has added more ounces to any resource in Australia by any company in the last 12 months. This is a team that you can see from those company logos below that has the experience of success and, of course, the challenges that this industry goes through at other companies that comes together to build Minerals 260. For anyone new to the story, Bullabulling sits 65 kilometres from Kalgoorlie on a sealed highway in a jurisdiction that produces 70% of Australia's gold. You would not want to build a mine anywhere else in Australia, in my view. Existing infrastructure, the workforce, supply chains are already in place. It's one of our biggest advantages to our project because we're not opening up a new mining district, we're just plugging into an existing world-class one. 2 weeks ago, we released our second upgrade in the last 12 months to the resource. In December last year, we grew the resource from 2.3 to 4.5, and we were thrilled with that. But then again, 2 weeks ago, Bullabulling grew another 1.7 million ounces to 6.2. 70% of it sits in the indicated category, and more importantly, we've maintained the head grade. This has really become one of my favourite slides. So this is our journey over the last 12 months. That resource in April 2025 is the same image I presented here 12 months ago, December, and now obviously 2 weeks ago with new resource. Those figures below is really what's driven our success. An incredible dedication to drilling, which is a key feature of Tim Goyder's companies, and that's why he's been so successful across multiple companies. The acquisition of over 1,000 square kilometres, mostly contiguous to our project, has also unlocked this resource, which I'll show you in a moment. And then from a value add perspective, one of the reasons why we've been able to compound our value 400% above the gold price over the last 12 months is that discovery cost. So we acquired this asset for $72 an ounce. We grew it for $14 an ounce in December, and then we grew it for $12 an ounce just a couple of weeks ago. Our current trading multiple is something like $200 an ounce. And this is where it sits compared to every other undeveloped gold project in Australia. Last year, we were middle of the pack. This year, we're leaping forward. We are now genuinely a tier 1 asset in Australia. And importantly, we don't stop. This resource remains open north of Dixon's, south of Kraken, west of Gibraltar. The strike length of this resource today is just under 9 kilometres. The potential strike length of this is 20. This is because 12 months ago, when I stood here, the tenement boundaries to the north and south constrained that resource potential, but no longer. We acquired those tenements several months ago. And mineralisation and geology doesn't stop at a tenement boundary. So what have we done with that resource? How are we converting that resource into what we believe is going to be a fantastic operation? In December, we published that resource. That was used for the PFS, which then was the basis for that 2.5 million ounce reserve, where 85% of that indicated material converted to a reserve. The DFS, which is already underway, will be supported by the new 6.2 million ounce resource, which includes 4.4 million ounces of indicated. So we're very confident that the reserve continues to grow when we release the new reserve with the DFS early 2027. Our development strategy is to stage our growth into production. If you balance risk, value, capability, capital, this is what many companies do. We did it at Carrapateena with Oz Minerals, and it's a very common approach with large scale and also growing assets. But more importantly, our growth is not a discrete separate event or discrete investments, but we've embedded growth and our designs to ensure, embedded growth into our designs, which ensures ramping up to our aspiration of 200,000 ounces a year is efficient, capital light and lower risk. But the PFS numbers for the base case, which will generate 150,000 ounces a year, speak for themselves. A post-tax NPV of 2.3 billion, an IRR of 43%, a 2-year payback with an all-in sustaining cost of 2,500, comfortably in the lower half of the lower Australian cost curve. $560 million of construction capital delivers 19 years of production and $330 million average of free cash flow. It's not an EBITDA, but that's free cash flow. This will be the foundations of the growth for the business going forward. Long life, high margin, large scale, compelling value. This is the best way to describe Bullabulling. First production targeted for the end of 2028 and growth already designed into stage 1 means we're serious about achieving that 200,000 ounces. A key feature becoming increasingly important for Australian projects is approvals, but ours are our strength. Sitting in the location that we are, a well-established mining jurisdiction, we have a land use agreement already with our traditional owners, but more importantly, an excellent and genuine relationship with them to work together. Our Western Australia only pathway to mining and development approvals ensures this doesn't get stuck, unfortunately, in a federal system, which is becoming incredibly challenging for this industry. This time last year, we didn't have a reserve. Now we have 2.5 million ounces in reserve, and it's the largest undeveloped gold reserve in Australia, not owned by a producer. This reserve was based off that 4.5 million ounce resource that I mentioned that we released in December, where 85% of that indicated material converted. And it's the same story with the reserve as it is with the resource. On reserves, Bullabulling is now ranked amongst the largest undeveloped gold project in Australia. And we've been very deliberate about thinking about growth from the very beginning. Stage 1 will be a 5 million tonne plant, but we're building the crushing, thickening and materials handling infrastructure and space to support 7.5 million tonnes a year, which will deliver that 200,000 ounces via a capital light increase in the early years of production. We'll release an expansion study alongside the DFS early next year. Our approvals are tracking to plan. We received our mine development and closure approvals for our village and water infrastructure earlier this year, and the approvals, which will piggyback off the back of those, will be submitted later this month. Because our resource sits on a granted mining lease that has been established for many years, we've got a streamlined route through that full approval under the WA state pathway. But none of that happens with a genuine social licence to operate. We have a native title land use agreement, like I said. We're surrounded by a long-standing, supportive mining community, which we will continue to invest in. And this, again, is one of our competitive advantages. And this is unique. Nobody has ever started construction of their project before finishing a PFS. But this is what the ground looks like today. In April, we signed a contract with ATCO to commence construction of a 400-person village, and construction started in May. Earthworks, room manufacturing has commenced, and the first rooms will arrive next month. Water bores are being drilled and tested right now. 400 rooms are targeted to be operational to coincide with the completion of the DFS and commencement of full construction. So this camp will support both construction and then our operations. Grade control started last month. The first 30,000 metres has been completed, which is a significant step to de-risking our operations going forward. But none of this happens without funding. And unique to us, we secured the largest investment by Franco-Nevada ever in Australia. $220 million split between a $170 million royalty and a $50 million equity placement taken at premium to the market at the time. Franco-Nevada is the largest royalty and the best royalty company in the world, and they don't write a cheque without significant and exhaustive technical due diligence. We couldn't be more pleased with this deal, and the team at Franco-Nevada are now considered genuine partners in this project. And yes, like all other development projects, we do need further funding. Beyond Franco-Nevada, we're running a highly competitive debt process with 10 domestic and international banks, targeting finalisation of those terms to coincide with FID, and then backed by that strong shareholder base that can really support us if we do need equity in the future. And this is our development plan. It's the exact same plan that we had last year. The big difference now are these green ticks. We've delivered on everything that we said we would do in the last 12 months, either on schedule or ahead of it. What's left is the DFS, final approvals and FID in the first quarter of next year. First production of fourth quarter 2028 is the same target that we're holding to from 12 months ago. We said we'd deliver this timetable last year, and we're still on track to achieve it. So 12 months ago, 2.3 million ounces, today 6.2. We hadn't completed a study, now we have. We're fast forwarding to production. It's the same company, but the same project, but significantly different 12 months later through that execution and delivery of our plan. Thank you, and I look forward to updating you again next year.